Okay, let's talk about gold futures. Everybody's interested in gold futures because, honestly, we've seen a big run. We've run from roughly 1170-ish up to, we're getting towards 1320. So it's a decent-sized move in gold. And, of course, the way that gold tends to work is it's an emotional market. People get really excited as the market's going up. Everybody gets bullish as the market's going down. Everybody's bearish and vice versa. Ironically, people tend to jump on the bandwagon at just the wrong time. For whatever reason, people like to remember the 2011 rally that just never ended. But the reality is that was an anomaly. It's not something that happens frequently. In fact, more often than not, gold rallies are really short-lived. You can see in this chart that we've basically, since roughly 2013, been trading in a pattern. And each time the gold market looked really, really good is exactly when the market topped out and rolled over. So in our estimation, we think that gold has a chance to get up into the 1350 area, somewhere in this ballpark. This is an art, not a science. So when we say 1350, we don't mean 1350 on the dot. 1351 is not a deal breaker. In fact, if we get to 1360, maybe even 1370, we probably aren't going to change our mind. We probably are going to be looking for gold to roll over at some point in that price area. And the reason being, seasonals start to turn bearish in late February. Also, we're just not quite sure the fundamentals in gold support anything much higher than the 1360, 1370 range. And so in the short run, the market can definitely go there. In the long run, it might be hard to sustain those prices. Keep in mind, like I mentioned, everybody tends to jump on the bandwagon in gold, and people get really, really dedicated to a particular trade. I remember in August when gold was bottoming down here around 1200, we happened to be bullish, and we received a lot of hate email, social media tormenting, that sort of thing, because everybody thought that gold was quote-unquote crashing and this was the end of the run for gold. And sure enough, it did actually bottom out and move higher. We were a little early, of course. It's almost impossible to pick highs and lows, and if you get somewhere in the vicinity, I think you're doing pretty well. But that's just how the gold market works. One thing we like to look at when we're trying to guess on which direction gold might go is the U.S. dollar. We've been showing this chart for a couple months now, and honestly, you can see the dollar really hasn't done a whole lot of anything. It's just sitting up here chopping around. But we do think overall the dollar is going lower towards 91. That would put us in line with trend line support and those sorts of things. If that does occur, that should support our thesis in gold. So hopefully you've enjoyed this little mini talk on gold. If there's anything we can do for you, we are a futures and options brokerage firm. You can find us at DeCarleyTrading.com. There's a lot of educational material, videos, articles, those sorts of things on the website. And if you want to learn more, I encourage you to check out Higher Probability Commodity Trading. It can be found on Amazon for the cheapest, but any major book outlet will carry it. Thanks for listening.